Is it BMO in trouble? Are all the big five banks in Canada, are they all in trouble due to these fixed payment variable rate mortgages? Well, we're going to get into it, and you're going to want to stick around for this one because it gets quite interesting when we start drawing the parallels between the mortgage crisis that is likely to occur in Canada and what happened in the US prior to 2008. So let's get right into this. Let's first define negative amortization so everybody can get their head around this and what it means, because I'm going to be saying this a lot in this video today, and I'm going to refer to it as NA just to keep it shorter. So if I say NA, I mean negative amortization. So negative amortization is a financial term referring to an increase in the principal balance of a loan caused by failure to cover interest due on that loan. For example, if the interest payment on a loan is $500 and the borrower only pays $400, then the difference is $100. And that would be added to the loan's principal balance. So essentially, that's what I'm referring to. Obviously, we know there is big issues at the Canadian banks with I'm talking substantial amounts of their mortgage portfolios. The balances are actually increasing, and people don't realize how profound this is. And I didn't realize how profound this is until I was reading on what caused the mortgage crisis in '08, some of the things that happened. And I feel like I had an epiphany, because it looks like the same thing is going to happen in Canada, and we'll go through exactly why that is the case as we go on here. So let's first talk about BMO. So 20% of variable rate mortgage clients have increased payments. Okay, that's something at least. The issue of growing amortization periods isn't unique to BMO, but it is being seen among static payment variable rate mortgage clients at other big banks too. That's because the Bank of Canada has increased rates over the past year. Those with fixed payment variable rate mortgages have seen the portion of their payment dedicated to interest costs soar. BMO said that it doesn't require those clients to increase their payments until the mortgage comes up for renewal, at which point the contract reverts to the original amortization schedule, which may require additional payments, BMO said. Now, I'm going to do my best to not get angry, because these banks are fucking crooked, and it makes my boil blood, because I know who will pay the price for this. Ultimately, it will be the poor and the middle class who pay for this. It will be every taxpayer in this country, but we know who's paying the most tax in this country, and it isn't the rich. So the funny thing about this whole situation may require additional payments. Well, that's funny, because do you remember certain types of loans in 2008 in the US which required a balloon payment? So essentially, after the defined term, 3 or 5 years, because the mortgage payment was an NA, it wasn't actually covering even the interest portion of the loan. So little did the person know their loan balance was actually increasing. So at the end of the term of this mortgage, they had to come up with this balloon payment. Well, it's just different. It's just a different type of mortgage, which essentially is doing the exact same thing. Because the only difference between these mortgages and the mortgages in 2008, and we'll get into an article which is talking about these mortgages from 2008, so you can really put it into perspective. But the only difference is the fact that if housing prices go up in Canada, they can refinance, and they could have done this in '08 as well. But if housing prices go up, they can refinance, and then they don't have to worry about making that payment. But what is the likelihood of housing prices going up to the extent within the next year or two when all this stuff hits the fan, basically? Because as soon as that unemployment rate goes up, a lot of people are going to be forced to sell their home, and they're going to be absolutely screwed, because they're going to be so far upside down on their mortgage because of taking out these mortgage products. So this product allows them to pay when they are able. Several customers have taken us up and 20% have actually put more money in. Yeah, 20%, but you're talking a massive amount of their loan portfolio. That is a tiny amount. So yeah, your buddy, he might have increased his payments, and good for him. That's a good thing that he's actually realized. But we're talking 20%. We're talking the minority here. So you got to think probabilities. You're talking at a large percentage of their loan book. And BMO, 32.4% right now of their loan book is like the loan balances are increasing. This is major, and I don't think people realize how major it really is, but it's crazy, guys. So BMO has seen the share of its mortgages with the remaining amortization above 30 years swell to nearly a third of its portfolio. That's up from 0 a year ago. And this is exactly what happens. This is exactly what happens. People can't even pay their interest on their mortgage. And then basically this presents either a problem when they renew, which we won't even get to there likely. We're not even going to get there likely. It's likely going to become a problem when they are forced to sell, when the unemployment rate starts going up, because that's exactly what happened in the US. A lot of these people, they never even got to the point where they had to make the balloon payment. Essentially what happened was they lost their job, went to sell their house, and they're like, oh shit, my balance has gone up. I'm upside down, and my home price has gone down as well. So these people were just screwed beyond belief, and the only option for them was foreclosure. And it happened en masse, and that could very much happen in Canada due to the volumes we saw in the mania of 2020 and 2021. The sales volumes, the mortgage refinancing volumes, they were all just sky high, and everything looked great for the banks. Well, it doesn't look so rosy for the banks right now. And thanks so much, G. Ellis, for the super sticker, even though I can't see it. It probably looks really cool. Anyways, let's see what else. So I just wanted to outline 30 years or more, 32.4%. So absolutely insane. And then just to show you how big their portfolio is, we're talking 141.7 billion. And we're just talking about one bank, not even the biggest bank in Canada. We're just talking about one bank. So bailing this thing out, it's going to cost probably north of $1 trillion. And the likelihood is that the banks are going to have to take on significant losses when this really hits the fan. And that could come as early as next year. So it's going to be really interesting. And then you can also see on here 48 billion in their HELOC portfolio. And then you've got the percentage of mortgage portfolio that's uninsured is 70%. This is another thing, because uninsured mortgages were all the rage. So we shouldn't be bailing out these banks, surely, but we will be. I mean, it's like I said, this is the thing that frustrates me the most, because when you have these oligarchies of the banks and stuff, I mean, yeah, anyway, I'm not going to go off on that tangent because we'll be here all night. I'll just be going nuts. We went through this yesterday on yesterday's video, so I'm not going to bore you with this. All I want to say is that 20% of CIBC mortgage holders are seeing their loan balances increase once again, and they're one of the biggest banks. And not only that, private mortgage defaults are on the rise as Canadians struggle to secure conventional loans. So they're always going to go first because they're the higher interest rate loans. They're going to the more riskier customers. So the subprime is going to start defaulting. And you can actually throw anybody in the bucket where their mortgage balance is increasing. They are subprime, as we'll see right now. So anyway, let's just finish this off. But CIBC's variable rate product allows borrowers to go beyond their trigger rate and stick with payments that don't cover the full amount of outstanding interest up to a certain limit. The unpaid portion of the interest is deferred and added to the mortgage principal and grows or amortizes negatively the borrower's loan balance. Now, the funny thing is, anybody who is cheering this on, going, the banks, they're so resilient. Why aren't defaults rising? Defaults aren't rising because they're allowing people to do this. But by allowing people to do this, they are creating a banking crisis. And it's just that I didn't realize it until it all really clicked last week when I was looking into 2008, did a ton of research into that, and I came across this. So this is really interesting. So this comes from 2008. And what we want to actually go down to, and it's a US article, and it's about 2008. Loans put in borrowers at high risk of default are also often called predatory. This would include negative amortization mortgages that allow borrowers to make very low monthly payments, causing the outstanding balance to grow over time rather than get smaller. Do you hear that again, guys? So they're saying that loans put in borrowers at high risk of default, and they're calling them predatory, are these negative amortization mortgages, which we're seeing in Canada, which was so popular, and the rage was all for these mortgages during 2020 and 2021. The hilarious thing was you could have got a 5-year fix for like 2% at one point, and people were piling in to these loans. And it makes me think that there was some sort of incentive behind that. Surely there was. Maybe mortgage brokers were getting paid better commission, bigger fees. Who knows what it was to sell those mortgages. But in essence, those mortgages were subprime. Little did they know. Now, those mortgages, if they had continued and rates had just continually gone down from there, even though the Bank of Canada had said at that point it wouldn't decrease interest rates anymore, then it would have been all roses. They would have actually been paying more towards their balance, right? If the interest rates actually came down. But of course, it was the bottom. They even said it was the bottom. People still took out these mortgages. Rates went up, and now they're in serious trouble, a lot of them. And they don't even realize right now, because the unemployment rate's low, and when that starts to tick up, oh, it's going to be carnage. Subprime mortgages come in various types, but tend to share several features. They start with a teaser rate, and you could have said that. You could have said that these mortgages started with a teaser rate, because really they are a low interest rate which keeps initial payments small and makes it easier for applicants to qualify. After 1, 2, or 3 years, the interest rate resets to a new rate calculated by adding a margin of 6 or more percentage point to some of the established floating rate, like the yield on a 1-year US Treasury bill. Typically, the reset involves a drastic increase in monthly payments, in some cases near doubling, which is exactly what we've had in Canada. You've heard stories all over of people's mortgage doubling. And those are the people who aren't in this bucket of people who essentially are having their loan balance increase because their payment is just staying exactly the same. And you know what? Canada has a massive subprime problem. Do not kid yourself. There is a huge subprime problem in Canada. I mean, when you've got so many immigrants that are coming over that are clueless about the financial system, and this is no offense to them. I was an immigrant. I came here. I didn't know about the financial system in Canada at all either when I arrived. So it's nothing against them, but they don't know the financial system. It's easy for people to swoop in and essentially take advantage of them. And, oh, I can get you a mortgage. I didn't think I would be able to get a mortgage. I've only been in Canada 6 months. Oh yeah, I can get you a mortgage. Come over with me and we can sort it out. We can create you fraudulent documents. We've seen it all. It's even been on CBC. I mean, if it's been on CBC, we know it's happening. I've been talking about this since 2021. It's been all over Reddit. This mortgage fraud has been rampant. So, Canada has got 2 crises that are going to hit it, and it's going to be absolutely catastrophic. And what ends this is the unemployment rate, which we're going to go through right now. So this is really the key part. So well done if you got to this part, because it's really key. And essentially what we saw, this is looking at the US, so it's delinquency rates on single family residential mortgages and it's at all commercial banks. So if you look at where this thing peaked, that's what I want to show you. So the defaults, the delinquencies, they peaked in Q1 2010. Okay, let's look at unemployment now. When did that peak? October 2009. Literally the quarter before default rates and delinquency rates peaked, so did unemployment, because the two are tied at the hip. And that's what I want you to see with these charts, is And they're all linked in the description, by the way. So if you want to do more research on that, you're welcome to do it. And basically, you can see that when delinquencies go up, guess what's also going up? Unemployment. So we all have to be laser focused on that unemployment rate, because that unemployment rate is going to show you where the default rates are going. And really what we're having happen right now are shadow defaults. It's essentially people are defaulting. They're not even paying the interest on their mortgage. It's just they don't really understand or realize what's going on. This would have all been in their mortgage contract, but who reads that massive contract? Who asks the right questions? I've seen the moral hazard that is in the industry, and it is quite frankly scary. And I just do not understand how people can't look at a video like this and put it all together and think, yeah, there's some way out. They'll be able to get some way out of this system, because I don't see it. You know, the amount of money that will be needed to bail this thing out will be enough on its own. And then the banks will be suffering for years with people who are then renewing, people who do get to the end, they're renewing, their house price has gone down, and people start to walk away. Let's face it, a lot of the immigrants will just go back to their own country, because they're already suffering, and it's already like 1 in 3 wants to leave or something within 2 years of coming to the country. So, I mean, Canada has created like an absolute recipe for disaster with immigration, subprime lending, the financial engineering of these fixed payment variable rate mortgages. And you know what Canada didn't have in 2008? It's the commercial delinquencies. It's the problems in the commercial sector. And we know, I've covered the chart enough times that you probably got it memorized, that private debt in Canada is at a massive high. And that is counting all those businesses, all those corporations that employ people are heavily in debt. And that debt is starting to roll over. It's starting to get renewed. It doesn't all come due as soon as the Bank of Canada or the Fed raises interest rates. There's something like $1 trillion in commercial real estate loans that have to be rolled over just this year in the US. So that just goes to show you the extent, and it will be similar numbers, albeit on a lower scale in Canada as well. But it will also be the same thing for businesses. That's what you have to realize. And those businesses are then going to be in trouble. Their cash flow is reduced, and we're heading into a recession as well. People are going to be spending less. So they're going to be getting hit both ways. And then you've got the dependence on the industry, on the real estate industry, on the construction industry. I mean, construction jobs, when they started to go in the US, they were a big cause behind the unemployment rate starting to rise at the very front end. And we're just starting to see those construction jobs get cut now. So that's really interesting to see as well. And then I wanted to bring up this because it's really interesting, because before even the unemployment rate started skyrocketing, the Fed was already cutting rates, okay? And I just wanted to show you that because you're going to be like the mainstream media is going to try and manipulate you to believe that these central banks have all these tools that they can use. They can raise interest rates, they can put them down, and that will affect everything. And the thing that really changed in 2020, and the reason we didn't have that crash in 2020, and it kind of took so long to come to fruition, and it's coming to fruition now, we're paying the piper for what happened in 2020, was because of the fiscal support from governments. And I doubt that's going to happen when they're paying like nearly $1 trillion to bail out the banks, because if they did that, the currency would just implode. I mean, it would just be an absolute disaster. So what's going to be really interesting is what happens. Does unemployment start spiking before? I mean, it's already started spiking in certain places. It's slowly started to consistently go up. Provinces like Alberta, and again, it's like another recipe for disaster going on in Alberta. You got high migration all of a sudden because the government said, hey, you should come over here. So everybody listens to the government. They come over. And it's just a cycle. All these things are just they're cycles. It's cyclical. It just, what goes around comes around. I mean, it's like I've explored in prior videos, the migration cycles, the boom bust cycles in housing markets, everything that you really have to see it to believe it on these charts to know that these things repeat time and time again, because it's just repeating human behavior. That's all it is. It's the same human behavior. It's the same greed. It's the same anxiety. It's the same fear of missing out. Doesn't matter what asset class. It doesn't matter what market. You get triggered with the same emotions, and the industries, they know that, the mainstream media, they know that, and they try and trigger it. And at the end of the day, all of this is going to be used to usher in a CBDC, a central bank digital currency. That is what they have planned down the pipe, and it's coming. You better believe it. And it's going to be an absolute disaster. Kiss goodbye to your freedom. Anyway, thank you so much for watching. Sort of hard to deliver bad news which like this, but anyway, just smile. It is what it is. Just thank our lucky stars that we're all prepared for it and we know what's coming, so we can take the action to safeguard ourselves and our families. If you enjoyed this video, you may like either of these videos, and I will see you guys in the next one. Once again, thank you so much for watching. Thank you for being on this. Much love to all of you. Bye-bye.